Hello, family. Welcome to today's session. And today we'll be discussing Volatility 100 Index. So, this is exclusively on Deriv Trader. Okay. So, for those of you who are new to this, before you can trade this instrument, you need a Deriv account. With all that being said, today we'll be focusing on fair value gaps and how to capitalize on them. But the first thing I want us to take a brief look at is market structure and leading up to those possible trades. So we can see the blue lines are indicating liquidity pools. So this is a bearish scenario. So we'll be looking at sell side liquidity. So previous daily lows. That's where our focus is going to be. So right now, we can see the market took off, retraced, took off again. There was a pullback, accumulated, took off, and then we see this sharp move to the downside, breaking structure. And then the market quickly reversed, went back as if nothing happened. Okay, so this is a faking zone. This is a fake out zone. Most of you like to call it that. It's a fake out zone. So we are not going to pay much attention to this sell side liquidity. Why? Because this sell side liquidity has already been taken out due to this fake out zone. And we're going to pretend as if we do not see this on the charts during our trade. It is just there to kind of mess up your whole perspective on things when it comes to trading the volatility index. Because this market is heavily manipulated by the algorithm, you have to be really, really careful, extremely careful. So we see buyers come back in, move to the upside, then a retracement, another move to the upside, and it comes back down. So now this becomes our low. Why? Because the market moved up, came back down. We saw that buyers came back in, trying to push the market to the upside, took out liquidity here, and then it collapsed again. And we saw it started consolidating at this point. So we see that this has become, in a bullish scenario, this will be our support zone. But we can see it trying to break that zone actively. So we can see the wicks, very strong and powerful wicks there. So buyers are still actively in this market. So sellers trying to drive the price lower, buyers still coming in. And we see that attempt to move the market higher, but then it fails. And we can see that sellers come in very strong, and then we have our break of structure. So one thing we're going to be focusing on is the candles that led to that break of structure. So we can see this candle is our focal candle. Why? Because we can see this is the candle that broke structure. Okay, so we can see this becomes our structure point because this is where the move to the upside began before it finally collapsed, and we saw the accumulation. So this was an active resistance zone in a sell scenario. This was an active resistance zone. Market moves up and then gains enough momentum and then breaks right through it. So we can see this is the candle that breaks that structural low. Right there, we can see it. It just goes through it beautifully. That big bearish candle. So that candle becomes our focal candle. That is where our eyes are going to be on in this trading scenario. Okay, so I've highlighted it there. Then we see that move to the downside takes out liquidity, sell side liquidity. Then the attempt to move back up, a retracement right in. And for those who entered early, we see that buyers got caught here on the double bottom, takes out liquidity again, and then moves up. Now, because this market is heavily manipulated, you see a lot of double tops and double bottoms like we saw here. This is a double top. On a higher time frame, maybe like the weekly, you see it more clearly. This is a double top. And this is a double bottom we see right here. This is the daily time frame. So he created more liquidity and then came to take it out. So now with this being our focal candle, because this is the candle that broke structure, we see that the market is aiming to trade right into it. So this is a gap right there. There's a gap in the market. So that is the gap right there that the market trades back into it. Now this market being the way it is, they try to hide it. So we see that move to the downside a wick there and then another wick there, making it look like the gap has been filled, but it hasn't. We want to see it actively trading into that gap to fill it, to fill that gap. And then we see that the market collapses. Another thing I want you to notice is here that prior to that break of structure, we see that the momentum started building up at this range. So we see an engulfing candle, relatively an engulfing candle. Even though it was not full, it is a reversal pattern in the market. So we see that reversal candle starting that momentum to the downside, and the market just falls like a ton of bricks. It collapses that double bottom and then goes to fill in that gap, our focal candle. And then we see it move back down to the downside. Sellers coming in heavily. Still, this is an active resistance zone. It accumulates a bit and then it drops again. So we finally see another break of structure. Hence, this is our focal candle. This is the candle that breaks structure, and we see so strong, that strong bearish candle right there, break structure. So this is our focal candle. And before the market has the opportunity to turn and fill in that gap, we need to see a draw on liquidity. So as we highlighted here, this, we are going to behave or pretend that this doesn't exist, because this was a fake out, fake of a break of structure right here. And we can see that the market goes for this liquidity pool. This is a liquidity pool that was taken due to the fake break of structure right here, or fake out zone. So this is the liquidity pool we are going to be focusing on. So the market comes for it and there's a sharp reversal right there. And just look at where the market is aiming for. That gap, this gap, our focal candle, that gap right there, goes in, fills it in, and then moves to the downside. Moves to the downside beautifully. So now there is a dilemma here. Why? Because we see a sharp reversal pattern back into that gap. So now where and how do we draw our new structural point? How do we do that? That is something that has plagued many traders in this market. But I want you to take a closer look at this. All right, take a closer look at this. We can see that when it came for this low, we see a sharp move to the upside, and we see the same thing right here. So how do we draw that? we're going to zoom in the chart, and we see that this is a valid resistance zone. Why we see an upclose candle right here, the market rests on it, comes back to the upside, tries to break through, and we see that that looks like an active support zone in a bullish scenario. But since we are in a bearish scenario, this is a resistance zone. So we are gonna pretend that this reversal doesn't exist. Why? Because it's a fake out. We see that engulfing candle right here coming in. This is not a bullish scenario. This is a bearish market. So any buys do not last. Buys do not last. They end up coming down because this market is very heavy at the moment. So this becomes our active support zone in this scenario, and it holds perfectly. So that's where we are going to draw our structural points from. And guess what? This is the candle that breaks through it beautifully. That strong bearish candle right to the downside. So that is where our focal candle is going to be. So we see that move to the downside, draws on liquidity, sharp reversal, and then it goes into filling that gap of our focal candle right there, and the market goes back down. So we can see that sellers are actively losing their strength in this market, and we are seeing that buyers are beginning to gain momentum in this market. So taking more sells, you should be careful in this market. And we can see the same thing right here. This is our structural zone right here. Forget about this reversal candle. This becomes our structural zone. We see how the market shows that there is a huge resistance here, and this is the candle that breaks that structure right there. So this becomes our focal candle. Market comes for liquidity, and we are seeing a move back into that focal candle. But because we are seeing weakness in selling, I'm going to be very careful taking sells here. We might see a little bit to the downside, but I'm not sure it's going to last. So once again, guys, thank you very much for staying to the end of this video, and that's just about it concerning gaps in the market. See you in our next video, but don't forget to like and subscribe for more.